All right, welcome to the daily market recap for Tuesday, September 2nd. In this video, we'll be taking a look at the action today of the indexes, liquid leaders, industry ETFs, then end the video with long and short setups going into tomorrow, like we do with every daily recap. So if you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with a live stream at the market open, you can sign up for the Discord using the link below. Getting into it, first day of September, usually the worst month trading in the market. I think I only have one profitable September, and that was last year. And it kicked off pretty poorly. NASDAQ had a large gap down under the 50-day moving average. But as you can see here, we undercut a previous support gap, rallied up, closed right at the high of the day. So great action after that gap down. But we did finish down 0.8%. S&P 500, similar action, gap down, undercut a support gap, rally at that point, closed right at the 20-day EMA. This is our second gap down from highs. The quicker that we can close these gaps, the better on the downside. And the fewer times that we have to test the support gaps on the downside, the better as well. But now we have both the NASDAQ and the S&P 500 under or right at their 20-day moving averages, exponential, which is a little worrisome. IWO, the growth stocks of the Russell 2000, great relative strength today, only down 0.6%. Undercut the 10-day moving average when it gapped down, but we reclaimed that support gap. We reclaimed the 10-day, tested the 5-day, and then closed a little bit off the daily high. We could see from positioning, the NASDAQ is still extremely overbought, and the extreme bearish or extreme short position on the Russell 2000 has started to wean down just a little bit. So that pair trade is not as aggressive as it was the last couple of weeks. The positioning on NASDAQ is still aggressively long, but the positioning on the Russell 2000 is not as short. ARKK, good action today. We had that gap down under the 50-day moving average, but rallied to reclaim that on a closing basis. We do have these two gap down zones, but pretty small overall. And really what I'm seeing is here's your initial low on August 1st, a higher low on the 20th, potentially a higher low today on September 2nd. If this low can hold and we can kind of rally up and build a tight pivot, this looks like an A plus chart. So hopefully we get that instead of a gap down, loss of today's low, and then a roll over to the downside. And then IBIT used to track Bitcoin. Good reversal today. Still just at the 5-day moving average. Not a ton of strength overall. Really concerning action since that false breakout on the 13th. We had one good day on the 22nd, and then from there, we've been in a pretty steep downtrend. Taking a look at the liquid leaders, I need to kick one of these off because I'm going to be adding Google to the list. As you can see, this is a chart that I should be more up to date on. But Google after hours is up about, I want to say 8%. Let's switch to like a 15-minute chart. Trading around 226. This is after the decision that they do not have to sell Google Chrome. Obviously, that's good news for Google, but trading right up near 222. I think we'll get a lot of feedback on the market tomorrow based on this gap up. If we do something like Microsoft, where we gapped up on earnings on good news, open on the high, closed on the low, and then we saw distribution from there? Or do we gap up, kind of have a morning sell off, but then close strong, and that good news is kind of like a breakaway gap? So, two different scenarios. Either way, I'm going to be adding Google to the leaders list just because it is one of the most liquid stocks in the market, and it has been trading just extremely well lately. Off that rising 20-day EMA. Now we've got the big gap up to 222. So I need to figure out which stock I'm going to be taking off this list for Google, but let's just go through them here. FUTU, the leader in China. China is a theme that I'm laser focused on. If you've been watching these live streams, we've been talking about it since the beginning of July, and just awesome action from FUTU since then. Today, exactly what you wanted to see. Little shakeout under the previous low at the 20-day EMA and kind of a breakout retest, reversed right off the open, reclaimed the 10 and the 5-day moving averages, closing up 0.7%, one of my larger positions. APP, and also a new addition to the list. I kicked out Uber because it's kind of trading right at the 50-day moving average. And there's a rotation into software that we started last Thursday, had a little bit of shakiness on Friday, but a lot of software names catching my relative strength scan. And so I wanted to add another one to the list. APP, awesome action today. Undercut the 10-day, undercut the support gap, rallied up to reclaim both along with the 5-day moving average, and closed like really close to all-time highs, or maybe not all-time. Let's see. Yeah, all-time highs, and is acting extremely well. Google, we covered. NVIDIA, another day of weak action. We're starting to see a lot of rotation away from the semiconductors into software names. Second gap down from the highs here. We lost the 5, the 10, the 20-day EMA on Friday. We closed below the 50-day moving average today. And we're still right around that area. And the first time we're testing the 50-day moving average usually does get supported. So unless we close below like today's low, I think we probably just chop around here overall and frustrate a lot of traders. But these two gap down zones are not minimal. And the quicker that we can get through them on a closing basis, the better. It is a couple warning signs here. And if semiconductors aren't really participating with the rally, it's going to be harder for growth stocks to work well. Reddit, little gap down, test the 20-day EMA, closed right at the 5 and the 10. This is up about 2% after hours as well. So a name that I'll be watching for tomorrow. SOFI undercut the 20-day moving average on today's shakeout. Still does have the gap down, but reclaimed the 10-day moving average on a closing basis. Financial ETF, XLF, continues to show good relative strength. So the fact that this came down and tested the 20-day, held, isn't a very large surprise. Hopefully we could close this gap, build a higher low, and then start trending from there. BE, second gap down from the highs. Friday's action I thought was pretty healthy overall. Today, first test of the 10-day moving average, really not out of character for this stock. If you kind of zoom out, every time we're in an uptrend, we respect the 5-day moving average on lows. And then any kind of contraction or pullback, we hold the 10-day moving average on a closing basis. Until that trend stops, this is still in character for the stock that's in a nice clean uptrend. So we'll see a close under the 10-day, and then this can come under some pressure because it's a little extended in the short term. Robinhood, another name that is giving me a little bit of caution. First test of the 50-day moving average happened on a gap down. We undercut the support gaps here and pretty much immediately responded to that area, just like we did on August 4th. So really, until we close underneath these two, I'm not too worried about Robinhood. But about 6 weeks ago, I would say the three kings of the market were NVIDIA, Robinhood, and Palantir. And NVIDIA at the 50-day moving average, Robinhood at the 50-day moving average, Palantir, you can see getting supported at the 50-day moving average, which again, I think is still healthy as long as we hold right around that area. But if we see those three, like the three kings of the market, accelerate to the downside, lose their 50-day moving averages and these support gaps, then I think we're going to be in for a pretty rough September. ALAB, another semiconductor with some weakness today, but still a higher low test of the 20-day moving average. Closed right at the high volume close from earnings, but did have a little gap down and loss of the 5 in the 10-day moving averages. And then MP has been acting kind of weak since this uppercut and failure of the resistance gap and the high volume close on the 26th. We had our first pullback into the support gap, 20-day moving average on the 21st, sorry. That was a really nice risk reward spot, but we rallied up, put in a lower high, and then today, gap down, lost the 5 and the 10-day moving averages, closed below the 20-day. Really don't want to close below the previous low in this area. Otherwise, this will be the name that I kick out for Google. Getting into some of the industry ETFs, today was a really great day for my portfolio because my largest position in LABU was nicely rewarded with XBI, the biotech ETF. Nice gap up, open on a low, close kind of near the high of the day, and really starting to like form out this uptrend. We had a test of the 200-day moving average back in July, and then pulled back into the support gap, a higher low test of the support gap. This was when it got on my radar. And then on the 12th, we kind of broke through the 5, the 10, the 20-day, and this pivot. That was my buy point versus the support gap low. We had like a 3-day push and then just a lot of volatility and chop, which was kind of annoying, but overall good relative strength. And then today we finally got that breakout. So still holding full position in LABU. Hopefully we can get like another 2 day or two trending higher, and then I'll trim a third into that and then try to ride the rest. Gold miners, GDX continues its monster run. Today, good close, good action overall of 2.6%. Now it seems like every single person on X is posting about gold and gold miners, which doesn't mean that the rally is over. It can absolutely continue because I think positioning is still relatively light on this. But we do have a potential hanging man candle here where we gap up, sell off, rally back, and close well. And then all that volume you see are people trapped. Well, currently they're just in the stock at that higher price. But if you get a gap down and confirm lower, like a loss of today's low, then you can see this actually kind of pull back and maybe catch up to the 20-day, this gap zone at 60.27. It just feels like now that everyone's on the name and we got a close like this, I'm a little worried that we'll get a gap down and kind of pull back here. But overall, great action out of gold miners. Until we see that confirmation, you're still in a clean uptrend above the 5, the 10, the 20, the 50, the 200. All those are in the right order. So don't get ahead of yourself if you're in the position, but just something to watch for tomorrow. Don't need to cover every industry ETF. Love the action out of KWeb today, though, where we gap down at the start, reclaim the 10, reclaim the 5, and then ended up closing green. This one I always talk about has a 3.5 year base that we're right at the breakout point on. So once that gets going, I think China is going to be a theme for the second half of this year to really focus on. Other ETFs, NLR, the nuclear and uranium theme, good shakeout under the 20-day, close back over the 5 as well. I think just needs a little bit more like little rally, higher low, some volatility contraction, and then this is another theme that could get going. And then another one that I'm going to be focused on is software. So this theme was kind of a nightmare to trade. July, all of August, as it was in this downtrend, losing the key moving averages. On the 20th, we had that shakeout to the support gap, and that kind of felt like a character change, which was confirmed later with a rally back through the moving averages. Today we got a gap down, and I'm not saying the software ETF itself is ready to get going, but when the ETF starts to put in a bottom, potentially a higher low here with the action that we saw today, you really should be focused on the leaders of that theme at this point, because if the industry ETF is starting to carve out a bottom, then the leaders are going to be on the right side of their base already, putting in higher lows, maybe pulling back to key moving averages, which are already in an uptrend. So a lot of the names on the long watch list are software names because it seems like this has gone through at least the left side of its base and now starting to work on either the bottom or the right side. And that could fail, right? We could take out the lows here and we could accelerate to the downside, maybe test the 200-day. But until we take out like today's low, I'm going to be considering this like the rounding of a bottom for software. And then semiconductors, closed under the 50-day moving average, but closed right at the high of the day after a higher low overall. So again, as long as the 50 days in an uptrend and we stay right around that area, I don't think it's the end of the world, but we see obvious rotation out of semiconductor stocks with 1, 2, 3 gap downs now and a loss of the 50-day. All right, getting into the long setups, we'll just order this by dollar volume, so most liquid to least liquid. The first is Tesla, which I'm still stalking here. So far, this hasn't done anything out of character during this consolidation. It's just still a higher low in the pullback. I love that we closed under the 200-day moving average because I don't think a lot of people will be watching this stock now that we had really ugly action on Friday, which stopped me out, and then follow through to the downside and a weak close under the 200-day. What I would be looking for here is a gap up opening range break to play versus the low of the day and the 50-day moving average. I'm not talking about a super large gap up, but we know Google is gapping up and the NASDAQ with that. So if we get a little gap up, an opening range break, kind of reclaim the 200-day moving average, that would be an entry versus the 50-day as your stop. And then just zooming out, it's been really consolidating here. You've got all the moving averages on right on top of each other. And after some ugly action here, it's really kind of shaking a lot of people out, myself included. but I am not afraid to buy it right back if it starts acting well. Then I can manage my risk even tighter. Palantir, this name, I was short this name up here, closed a little bit, and then eventually had to close the rest of it on the 26th after one, two, three, four tests under the 50-day moving average and support gap. At this point, if it was going to close under the support gap and the 50-day moving average, I would have expected for it to do so on the first six attempts. Right now, by the end of the day, institutions are stepping in and they're soaking up the shares here right at the rising 50-day moving average. Even today, on the gap down today, this should have accelerated to the downside if it was going to do so, and it didn't, right? So what I'm watching for here is another kind of pullback into that support gap, but a higher low overall. I've noticed a couple times when a stock does this, where it like wicks below a support gap multiple times, the best entry is a higher low, like undercut. So somewhere around like 154.40, and then stop would be today's low and try to play that for a new uptrend here. APP, just looking for a pullback into that support gap, into the 10-day moving average, just a higher low overall, right around that 464. Stop would be today's low. Alibaba, monster move. I did buy some today as it came through the high volume close from Friday. So got positioned in it. Not a very large position. It's like 12% at this point. Um, would be looking to add on to it on market weakness. If this pulls back into that high volume close, stop would be today's low. Ideally, that happens over a couple sessions where the 5-day moving average could catch up to that area as well. But this is another name that on a weekly chart, you can see we've been basing for multiple years now. And with that gap up on earnings, along with the KWEB ETF and the rest of the Chinese stocks that are acting well, it does feel like this is the time to really focus on China. TEM, this had awesome action today. I should have been all over this with I came into the session thinking to buy undercuts and did not get positioned well on this. I didn't trade it at all, but awesome move. Immediately like some relative strength in the morning because it gapped up while the rest of the market was deep red. Quick shakeout of the lows of the pullback in the 20-day moving average. Recapturing the low of yesterday should have been the buy point for me. That was just a missed opportunity. Then we closed extremely well, up 3.2% on the day. Now I'm just looking for kind of like a pivot retest at the 75.90 area, the 5-day moving average. It's a potential buy versus. I don't want to use today's low. That's a little too wide. I'll probably just use like a 3 or 4% stop on this. But TEM, massive IPO base, starting to show some real relative strength here. So something that I want to be focused on. IONQ, coming into the session, we had great charts out of RGTI, QUBT, IONQ. Then the first 90 minutes, just bloodbath for all of those stocks. But by the end of the day, we reversed. We closed really well. QUBT still pretty weak. RGTI not awesome. But IO and Q, some really nice strength, not only in the group, but in the market overall, finishing the day up 0.5%. This is one where I'm just looking for a pullback into that gap zone, 40.85-ish area, below the 5, the 10, the 20, and the 50-day moving average. So basically, that shakeout that we got today, just looking for a higher low shakeout to play versus today's low. Wolf, this is a very powerful stock that is continuing to trade sideways. We are kind of megaphoning out where we have higher highs and then lower lows. But overall, if you compare that to what the market was doing today, great relative strength where we only pulled into the 10-day, where the NASDAQ was at the 50-day. Undercut that, immediately responded to that level and the support gap, closed right near the high of the day, back over the 5-day moving average, finishing the day up 1.9%. Now just looking for a pullback into that 916 area. Uh, Ideally, the 10-day would catch up to that in a session or two. Or if you want to take this on strength just through today's high, that's not usually how I want to play a name like this that we've seen volatility increase. Even though it has had great relative strength, it's just a harder setup to play overall because your stop is going to have to be wider. unless you play it on the breakout, stop would be the low of that day, whatever that would be, maybe the 5-day moving average. Even that's about a 6% stop. So something I'm watching for a pullback into that 920-ish area. Net, another software name, great relative strength today. Quick undercut of the 20-day, got into the support gap zone, reclaimed the other support gap zone and the 5 and the 10-day moving averages. This one, I'm just hoping for more volatility in the overall market. Maybe the overweight positioning in the NASDAQ brings back some tech names and we can get another test of this like 20-day support gap zone. I have alerts at the support gap, like the higher support gap low. Ideally, what we could get if we don't get market weakness tomorrow and like we come back down in this area, if we have a day or two where we uptrend here and then come back and test the higher support gap, the 10-day at that point would be in this area. So you have like two key areas to undercut, to shake people out and reclaim. So not immediately buyable for me, but something that I'm going to be focused on because I do think net is one of the like cybersecurity leaders, along with like the software theme that's starting to work. UUU, good undercut at the 10-day moving average and support gap today. Closed right at the high of the day. Just looking for a higher low test of that support gap, 10-day moving average, right at that 1092 area. Stop would be today's low. PGY, another software name that I was focused on coming into the day. I just don't love to buy support gaps where you gap down right at the low of them. I like my best trades on these support gap zones is when you pull back intraday and you have like usually like a pullback the first 30 minutes, a little rally, and then the second 30 minutes you get a secondary pullback to shake out anyone who bought earlier in the day. So I did not start a position on this. I hindsight, right, 2020 should have at the support gap at the 10-day moving average, closed super well, but we did not have that information that the market was going to rally on the open. Now that we do have some evidence that buying came in at this breakout retest, same area is on watch for tomorrow or later in the week, that 3480 spot, support gap, 10-day moving average, and then play that either versus the 20-day moving average and the low of 3315, or just the low today, keep risk really tight. Resi, REZI, monster stock recently from 14 up to 33. Now starting to pull back a little bit. The Home Builders ETF is one that's been getting a lot of traction lately. That's ITB. Whoops, ITB. You can see all the blue skyscrapers as that theme is being heavily accumulated on the way higher. So REZI, one that I'm watching for the first test of the 20-day moving average and gap zone at 3185, something that I feel pretty comfortable sizing up. It is a little bit thinner, so it wouldn't be the size of like a NVDA doing the same thing or I a more liquid name doing the same kind of undercut and reclaim, but it's the right theme. It's the first test of the 20-day, and you have a gap zone there, so something that I will be focused on buying. And then BTDR, a little squat today, but good relative strength overall. Finished the day down just a 0.25%, still over the 200-day moving average. Had a higher low test of the 20-day, held that area. So just looking for right back through this pivot at like 1440 as a potential buy point. Stop would be probably the 10-day moving average. Might be a little bit wide, so you'd have to position size lower, but something similar to Tesla where we sold off and then we started to coil tighter and tighter and tighter. From contraction comes expansion in one direction or the other. Which direction? We're still in a strong market, so my guess is to the upside. But we don't have to guess. We could just play the breakout and then manage our risk on the downside. On the shorts side, 8 setups here. MSTR is the first one. Extreme weakness here compared to Bitcoin. Had some strength earlier in the day where it tested the 10-day moving average, but rejected that, closed right at the 5-day. I do have a short position in this from much higher, but looking to add to it. Hopefully, we can get a rally in Bitcoin, and then this could come right back up to the 200-day moving average, this resistance gap high. You also have the 20-day moving average coming into this area. So I have alerts right around this like 357, 358 spot to look for an uppercut and fail, and then to size into the short on this side. ARM, we've talked about the short before going into NVIDIA's earnings, never got the traction to the downside to hold into that earnings call. But since then, we've had gap down on Friday, gap down today on Tuesday, loss of the 200-day moving average. Now we're just looking for a rally. Hopefully the market gets strong. We get a little rally back through the 200-day up into this gap zone. You'll have the 20-day moving average catching up to that 138.50 area for an uppercut and failure there. Joby, there was a small support gap here, which I can redraw, that I didn't want to short until we had a close below that. Today, we closed below that, so we removed that support gap. We have another gap down and a weak close. Just looking for a little rally up, uppercut and fail of the gap zone. Maybe the 10-day moving average can catch up to that in a couple sessions. Play that versus the 50-day moving average. But this really does just feel like momentum's being sucked out of this name now. CDE, kind of on the same idea with the gold miners, where now everyone is on top of this theme. We do have a really strong close, like daily closing range today. But this is a potential hanging man candle where you get a ton of volume, you get a quick sell off to a key moving average, close near the high of the day, but tons of volume in that move. The only way I would short this is on a gap down versus the high of today. This is a really strong stock and the theme is strong. I just don't know if it's overcrowded at this point. So gap down, opening range break is a short versus today's high, but don't fight it. If it takes out today's high, chances are this is set to go even higher than that. Sezzle, one of the more speculative names that had a monster move earlier in the year from 25 up to 180. We had a lower high and then a huge gap down on earnings, down 34%. Traded sideways, did not respond to any market rallies, and now we're back under the key moving averages. Follow through today. Through today's low is a short versus today's high, and the 10-day moving average is the stop. ROOT, Root Insurance, exactly the same setup as SEZL. Had a monster move. I think this actually moved from $3 up to $160. Starting to churn, couple gap downs, then a huge gap down and sell off on earnings down 26%. Sideways action without any price appreciation. And now we're back below the key moving averages. Through today's low is the stop, or is the entry. Today's high and the 10-day moving average is the stop. MMYT, kind of a similar setup to SFM that I've talked about constantly as potential short setups because we have your stage 2 uptrend, you have your stage 3 top, and now with the 200-day moving to the downside, another lower high test of that area, and a gap down loss of the 50-day moving average. It's very likely that this is starting into a stage 4 decline, just like the chart of SFM, where you had a big stage 2 uptrend, big stage 3 top, lost the 50-day, and then you lost the 200-day. Now the 200-day is rotating down as well. MMYT is a relatively slow mover. What is the ADR on this, actually? ATR is 2.7%. Do I have ADR here? 2.5%. So not a very fast mover, but one that you could probably play for a long unwind of this once we start our stage 4 decline. Then SLDP, this was actually on my watch list coming into the day if we had a gap up and then take it out of today's high, because it is a name that has a lot of power, went from 71 cents up to $5. Now it looks more like we put in a low, rallied up, a lower high, and then we lost the 20-day moving average and closed weak while everything else in the market closed pretty strong. So one that I'm just looking for a little rally up into the 20-day, into that 425 spot. As an entry, stop would be the 10-day moving average. Don't want to give it a lot of room because I still think there is potential that this can gap up and take off again. But if we're going to see momentum roll out of this name, we could have some pretty quick moves to the downside. So that's going to be the market recap for Tuesday, September 2nd. If you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market take throughout the trading day, along with the live stream at the open, you can sign up for the Discord using the link below. Have a great rest of your day, and I'll see you tomorrow.